Alright, guys. Yeah, welcome back to the first session, uh, London session of 2026. Alright. So remember, when was this? I think on Friday we had a like quick session actually later on. You guys, I think, yeah, there's some people saying like, oh, Sai is selling from this and this, bro. The range that I did speak about, the range was still between this high and this low. And as you can see, price never came to break this low. If price was that bearish, price would have continued creating a lower high and then coming to break this low. Yes, we did have a double top over here. Then this double top should have also continued to the downside, only to break this low. Then, only then, that's when we would have considered, you know, sells, right? I did show, I didn't record that session, but I did say only if price breaks this low over here do we are we gonna start looking for sales, because now that will be an indication, and price we wanna have to wait for price to come back and correct, and anything below here we can then look to take to the downside. But as far as everything is concerned, we are not bearish, we are 100% bullish. You get what I'm saying? So there you have it. We had a break above also this consolidation over here, right? So if you would have preferred being, above to look for buys also. I mean, I already said we have an indication on this high, on this previous high. We have an indication above that, and we have an indication also above these all-time highs that price did make before, right? We had an indication above that. There you have the indication, right? So price came to correct both these. You understand? Both that those indications. Price came to correct both these. So as you can see, price then broke above that. So if you would have preferred probably being above that, maybe these consolidations, I mean, these equal highs that we have over here, you would definitely go to the likes of 15 minutes, right? Start to see, look for what price can do in 15-minute high highs and high lows, see what price is doing. As you can see, we had obviously price making higher high, then, higher low, but then obviously we had this higher high and higher low also above these ones that we have currently over that price actually, right? The over the what is this the previous all-time highs, high low on the five it was created, right? And then obviously from there price started to move to the upside, right? And broke above. But if you would have preferred being above, it would have been a little bit tricky, especially looking at the fact that price did leave this, you know um this rejection candlestick on the 15, so it would have been a little tricky. But if maybe you would have maybe wanted to see price break above, those all-time highs, above that, then you would have got in. Also, if you would have wanted to have price above these range high that we had when price made an indication, right? Then you would have taken it same way as prices, same way as price was able to move from these, from there. You'd have been maybe waiting for it to do the same thing, higher, 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 low, and then obviously being able to capitalize off of that, higher, high, higher, low being created, and then obviously you're definitely gonna have your buy stop waiting, right? You're definitely gonna have a buy stop waiting at this, it's gonna look somewhat like this, the buy stop is gonna be waiting at this level. Buy stop, you let the buy stop get triggered. Obviously, once the buy stop is triggered, your stop loss would have just been below the high lows, probably, then your 1 is to 3, let me see, 780. 780 is probably around about 2 point, yeah, 2.360, somewhere here. Yeah. So that would have been probably a 1 is to 3. There you have it over there. Stop loss just below the high lows. What the hell? Yeah, so where's below the high lows? 1:3. I think, yeah, pretty much, man. More or less the same thing. Yeah, more or less the same thing. 1:3. That would have been your 1:3 so far. So as you let it unfold, there it goes. You see?
How would you
So
have took that on the 1 minute?
come again?
How would you have took it on the 1 minute?
How would I have taken it
Yeah, on the one.
on the 1 minute?
Yeah.
No, there's no need for you to go to the 1 minute because the 5 minute was already giving you the setup. I think most I've seen like most guys the problem is guys they will mark on the 5 minute. You don't need to mark on the 5 minute when you have a time frame. You don't mark. You don't even mark on the five. The 5 minute and 1 minute is just for entries. You understand? Like for instance, let's take this over here, right? Let's take this over here. Price broke above this first time, right? Created a lower high, right? I mean, create a higher low, lower high, equal lows, and then you would want to be above this, right? But as you can see in the 5 minutes, not giving you higher highs and higher lows, but here it would have given you higher high, higher low. You would have taken price to the upside. But if you went to the 1 minute at the very same point, at the very same point, as you can see, price is giving you higher high, higher low, and then you would have taken price to the upside. But as you can see, at this level here, where we were, right? If you would have preferred being on the 1 minute, I mean, price mid high low, mid higher high, mid higher low. Then, if you would have preferred doing that, sure, you could have got in also. I mean, there was no harm in doing that, but the 5 minute was already also gonna create something for you, right? Prices you can see higher high, higher low created, right? The whole uh,
Yeah.
um chart is doing higher highs and higher lows. We know we are bullish, so we're looking for a higher high and higher lows. You get what I'm saying? So higher high, higher low being created. Obviously, at this very same level over here. Um, what are we doing? Right. You see, price is above that that range high, is above the range high, making higher high, and it made a higher low, right? So you wanna see obviously price moving to the upside. If that's the case, you know what I'm saying? So you're gonna have a buy stop waiting at this area. We let it get triggered. We just obviously a stop loss gonna be below, right? Whatever your risk would have been in this case, you know. If you let's say you were risking around about, yeah, let's say you're risking 350, that means your TP will just be about 1050, right? 1050, yeah, that's your 1:3, right? So this would be stop loss just below the high lows, man. What the hell? Oh man, yeah, stop loss just below the high lows, entry triggered, right? 1:3. I don't know why it's not doing 1:3 at that level because that's a 1:3, man. Yeah, still fine. Alright, so now as you let it play out, as you can see, there it goes. It plays out higher high, higher low, being created in the five. That was on the 5 minute. The higher high and the higher low being created in the 5 minute, and then there it goes. breaks above the structure. We have a break of structure above these levels over here, right? And there you go. It hit TP. You get what I'm saying? And there it goes. There it continues to go. But advisedly so, like for me, I would highly prefer like waiting on, on the 5 minute firstly. If you don't see anything on the five, then that's when you can go to the one. You like guys, it's very, 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 like trust me, it's very important that when it comes to your trading, you have a trading plan. I cannot emphasize this enough. It's very important that you have a trading plan. Your trading plan should consist of these three, right? Your trading plan should consist of these three things, right? I'm just gonna show you now, right? Let me just do this. Yeah, your trading plan should consist of these three, right? Trading plan. Let me change this. Black man. All right, a trading plan should consist of these three things, right? Number one, your A plus setup. Your A plus setup, right? And then we have number two, entry criteria. Number three, your RR, risk to reward. Your maximum being 1:3, not anything above it. Your maximum being a 1:3. This is a process. Once you have this is a process. You understand, right? Your A plus setup can look somewhat like this. Um, you have obviously price giving you an indication, right? So that's giving you guys some pointers, right? So you have price giving you an indication, right, above the previous highs, right? Price gives you an indication, right? And then this is your A plus setup. You wanna see price give you an indication. You wanna see an indication, right? You know that price has to come back and correct. That price has to come back for the correction. You know what I'm saying? Now the entry criteria comes into play, right? You're like, okay, for the correction, for me to get into the trade, I'm gonna wait for price to come back to this level, to correct back to this level. What you know what I'm saying? But for me to get into an entry, right, so that I can take price to the upside, continue with the trade, I'm gonna have price taking price at these very highs over here, right? Stop just below the high lows, the previous high lows, and I'm gonna be looking to take a 1:1. You get what I'm saying? You don't have to worry about whether price is gonna come in to correct back into these, whether price is gonna correct just above these. But obviously, because of your buy stop is waiting above these previous highs, just like the above these previous highs, including the wicks. That's where your buy stop is gonna be. You're gonna be aiming for a 1:1. This is an entry model. This works. This is an entry criteria. Your risk to reward at this is 1:1. You get what I'm saying? It's a 1:1 risk to reward. So you're risking $100 to make $100. Trust me, this doesn't say this year also has money. It's not a thing of, oh, but 1:1 is too small. Bro, stop thinking about the target. Like stop thinking about, oh, I need to make like $1,000 now. Oh, bro, 1:1 will build so much confidence, so much, discipline process into you. You get what I'm saying? I did show you guys some example. I think some time back when I was explaining like when you put $100 into your account and you do a 1:1, you flip that account 5 times. You are already on after the first flip, successful flip. You are sitting at a 1:32 because you flip $100 is gonna be $200. Now you flip $200 is gonna be 400. You flip the 400 is gonna be 8. You flip the 8 is gonna be 1600. You flip the 1600 is gonna be 3200. You get what I'm saying? After 5 flips is 1:32. You get me? Right. That's just number one. One of the entry criteria that you can take. Right. Number two, the second entry criteria. Right. That is on. This is for 1:1. Right. Let me just put it here. 1:1. Risk to reward ratio. You know what I'm saying? So you're gonna have something similar also happening, right? Now, this is based off of something that we all know, right? This is what we based off something we all know. Obviously, price is broken above these levels over here. Right? Price comes in correct, creates a higher low. Soon as price gets above this level, obviously your entry would be above there. This is what size says, right? And then you take price as it continues. This is mostly to be a 1:1.5 or a 1:2. That's what you can get from these type of entries, right? Soon as price gets about this level, this is what I say: stop loss just below the high lows created, and then you take price to the outside. So that would mean your A plus setup would be only for price to correct back into. It shouldn't be above because you're gonna get knocked out because price may just bounce from here and then you enter buys only for you to get taken out, right? You're gonna be entering buys, stop loss from here only for you to get taken out. It should only be below. It should only be correcting into. You know what I'm saying? It should only be correcting into the previous highs, so you can create the higher low. You know what I'm saying? You should only be your A plus setup should only be made out of that. Then stop loss just below the high lows created on the higher time frame. Obviously, looking to make whether 1:3, whatever the case may be, 1:2, well, probably 1:2. The maximum of this is gonna be a 1:2. You get what I'm saying? So, like I said, 1:1.5 or 1:2 or is to reward. Most of the time, that's what it's all about. This is the your setup. A plus setup is indication, the correction back into, and then anything above you buy. And this can be happening mostly. You wanna see this happening is mostly on the 1 hour or the 15 minute. You get what I'm saying? So same thing above with this one above here. You wanna see this happening on the 1 hour or the 15 minute. You get what I'm saying? So you can be able to trade on a daily basis. You get me? Then we have the third one. Now this is the hustle one, man. This is the hustle one for those who will be studying structure, bro. Like, yeah, if you wanna get good with structure, bro. Like, okay, we have an indication, price comes back to correct, right? And then we take the continuation, right? But with us, what we look for the internal structure, right? You're gonna be looking for the internal structure because as price is coming to correct, is making lower lows and lower highs, right? And then all of a sudden price starts to make higher highs and higher lows, right? And as you can see, there we have price making higher highs and higher lows. So obviously from lower lows, lower highs, price must make higher highs above the level where price has shown you an indication, right? And then obviously higher low. That's all I need. Stop loss below the higher lows. My 1:3. I'm out of the market. You get what I'm saying? This would include that. So A plus setup 1:3 RR, this one, right? A plus setup, obviously, you want to see price giving indication. Obviously, price coming back to correct also with the correction. You can even trade the correction as price will be making in a shift in market structure and going to the downside. You can come with it to correct. Your TP would be at this level. You can first trade, probably second trade, you can take it as price has made a shift in market structure, price in correlation with the overall time frame, which is making high highs and high lows, the smaller time frame making high highs and high lows above a level of price is giving an indication, you can be willing to take price to the upside. So that's what we gonna be talking about. This is some of the things that you can choose from. You know what I'm saying? So whichever works, understand who you are as a person, right? You know, like, oh, I'm suffering with, being able to hold trades way too long, or all these kind of things. If that's the case, stick to this. Stick to honest to one. Stick to honest to one. Especially on the 1 hour time frame. You know for sure if price breaks below this level over here, if price breaks this previous high low over here, that's a shift in market structure. That means the trend is changing. Now you cannot, because price will then go to the downside, come back to correct, and then you're gonna look to take price to the downside. It's as simple as that. You're making a trading as simple as possible. You get what I'm saying? If you wanna trade like Cybro, you can take this. I mean, there's no, it's just straightforward. You wanna have price being above where the indication was. That's where you take it. You continue. You can continue with it as long as price above. You can continue with it. Stop loss is gonna just be above the below the higher lows, right? And then you have us the the hustle, bro. 1:3, there you have it. You're risking $100 to make $300. Risking $100 to make $300. 1:3, shifting mega structure, whatever. You can trade these also from, you know, also the same, but obviously understanding where you can find trends. The trend can be coming also from a 4 hour at this level here. The trend can be coming from a 4 hour also. Then the internal structure there you have that you can take an advantage of the internal structure. Just from referencing the internal structure. You get what I'm saying? Yeah. But like I say, guys, it is very, trust me, it's very, 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 very important that you prioritize that trading plan. It's very important that you do that. It's very, very, very important. Because without a trading plan, you're just trading. Trust me, you're just wasting your time. You're just trading for the sake of trading. And nobody wanna do that. Nobody wanna do that. Nobody wanna say trade for the sake of trading, because now you're not gonna have like targets. You're just going with the wind. You get me? You're just going with the wind. This is what I was showing you guys. Price is very much bullish. Price is very much bullish, bro. We're very much bullish. And I told you guys, oh, we bullish. Well, then you guys were like, oh, but size, bro. I don't give a fuck what size says. Literally, I don't. I'm gonna trade what I know price action. It's just that he was able to explain ICC, yes. But you need to understand price action, like as it goes, and market structure as it goes. Like, you understand? He can be wrong. There's no doubt in it. He can be wrong. That's what you should understand. I can be wrong. You understand? But that's what I'm trying to show you. Trust your own analysis. If you are wrong, you realize, because I said, okay, this and this, you're like, oh, I made a mistake here and here and there and there. It's fine. You understand? But it shouldn't be a thing where you don't, you want, because me, I said so, you then change your whole thing. Because now you can never have your own. a thing that you're gonna trust on your own. You're always gonna be looking for something. What somebody says. Oh, what did the hustle say? Oh, what did the side say? There's no confidence in that, bro. Like honestly, there's no confidence in any of that. You get me? You need to have your own backup, bro. Like you need to have your own thing. Back yourself up. Back yourself up. So at this stage, you could have had, if you were trading the ICC that everyone knows. If you would have preferred being above the all-time highs, that would have been the case. Stop loss just below the higher lows, and then like I said, almost 1:5, 1:1.5. That would have been the case. I think 1.5 actually. Yeah, 1:1.55 RR. You get what I'm saying? If you're aiming for this, would size entry model 1:1.5 RR. If you were going for the 1:1, I think would have been stop loss would have been below these lows over here. You would have been obviously preferred to be being above these. This would have been the case actually as price came the first time to correct price. You would have been in this trade from these levels and then obviously aiming for a 1:1, which would be just about this point. Or if you were aiming for the whole to the upside, that would have been almost a 1:2. Stop losses below the high lows, remember, of the range created on the 4 hour. So this would be the trade that you'd be in. We wouldn't have worried about any stop loss being hit, any of that. You would have been risking $100. You would have had a buy stop waiting at this point. So it would look somewhat like this. It would have looked somewhat like this, right? Soon as price was coming to correct price, right? You would have had a buy stop waiting at this area, right? And then as price unfolded to the downside, right, and triggered your entry, stop loss would have just been below this over here, right? And then what the hell? Yeah, let me just do this, man. You get what I'm saying? So stop loss would have just been, yeah. Let me just have a buy stop waiting. Yeah. So stop loss would have just been below here. Let's say $1,000, risking 1% of your account. 1:1 would have been here, and then 1:2 would have just been there. Get what I'm saying? So this would have been the trade for the past few days from last week until today. This would have been a trade, almost getting taken out, but not really getting taken out. And then, as you can see, you would have been putting profit, and then price coming back, and obviously price going up until today. You would be running about 600 in $600 in profit. Currently, you'd be running with $600 in profit. That's what you can go for. You understand? That model, that first one, that 1:1 model, where you can like, oh, just gonna be indication. When indication happened, I'm gonna have a buy stop here. They're waiting there for price to come back. If price comes correct, triggers my buy stop. My stop is gonna be below the high low of that range. High low, and then high indication. My stop is gonna be there. I can aim for that. Success rate, I mean, bro, that's near almost near 95%, 98%. If price was to break below here, that's the only time price is gonna be. We know that price is going down. But as far as price is going to the upside, even here, look here, right? We had this previous range, higher high over here, right? And with the low over here, right? With the low over here, right? Obviously, we had price making indication came back to correct, right? Top loss below the high lows. And then if we were aiming for 1:1, 1:1, then we have a 1:1, right? There we have it. Chances of you being taken out, very slim. Very, very, very slim. They're very slim. You get what I'm saying? So as price was going to the upside, as you can see, price going to the upside. That was what price was doing. You get me? So that's that. That's that. If you would have went with the side one, stop loss would have probably been just below the high lows over here. The high low created, this high low created. But you would have got caught the first time because price broke above this level the first time, and then the stop loss would have been just below here, which I'm definitely sure Sai got caught the first time. He was buying price here. He got caught. Stop loss was below the high lows, got caught the first time. And he sold again, which he also got caught again because price went to the upside. He blew that $2,800 account that he said he's going full margin on it. He blew it. Even on his personal $400,000 account, you went on a serious drawdown. I'm definitely sure. Stop loss, he said he's not gonna put a stop loss, but once his trades get above this level, he's gonna probably, man, yeah, probably got taken out. But that's what I'm saying. You know, you need to have a clear entry criteria in terms of what you're gonna be going for, whether you're gonna go for this or whether you're gonna go for, the entry criteria of the hustle, or whether you're gonna have to go to a smaller time frame, get the correlation between the higher time frames where price, is making all those kind of things, right? As you can see, you can have price gonna make higher, 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 low. Obviously, higher, 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 low. I mean, why not? You get what I'm saying? Why not? Stop loss below the high lows, above the indication level of the range, right? Above the indication level of the range. Prices above that area, right? Higher, high, higher, low. 1:3. At this level, we are almost near TP. You get what I'm saying? We are almost near TP, risking $100 to make $300. You get it? So pretty much that's just about what I'm talking about. Either way, yeah, we can expect price to continue to push to the upside. Um, but I'm thinking on the 1 hour, there's something I think I saw. Let me just, yeah. I'm just going to delete almost everything. I'm just delete everything. Under 1 hour, actually. Hey, I have a mild flu, guys. I don't know where this summer flu coming from, man. Alright, so under 1 hour, as you can see, we have price made a shift in market structure, higher, 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 low. Because these lows were higher than this one. I spoke about that. Also, we had price also giving us an indication above these levels over here. And then obviously that is why I was saying price is definitely gonna be bullish. Why? Because price is making lower lows and lower highs going to the downside. If that's the case, price would have continued. But now we had a shift in market structure, this level indication, correction, continuation to the upside, indication, correction, continuation to the upside. So we could have been looking for also for buys at these very same levels. So as you can see, the very same level again got tapped up. You understand? So price, as you can see, price make high highs and high lows at the very same levels to the upside. So as you can see, we're at the very same level also getting tapped. Stop us below the high lows. Obviously, it's gonna be at this point. Like I said, 1:3 almost about to hit. There you have it, almost about to hit our 1:3. And then also, now that you know that we have that indication now, we can also expect price to give us some sort of some sort of a correction from this indication that price has just made at these levels. So I'm not sure, but I will see. Let's see what the 1 hour looks like. Yeah, we have some sort of play around at this level. Price might just continue to push up a little bit, come back and correct, and then continue to push. So somewhat of the same thing that might be happening. So we might see something like this. Actually, we might just see something like this where price might just continue to push, to the upside and then come back to just tap in and then continue to the upside. So something like this might be something that we might be looking forward to seeing as price does its thing. You get what I'm saying? So those are some of the things, obviously, you know, to look for. So as you can see, as simple as that, high highs, high lows, and price is going to the upside. So obviously looking for trades, simple as that. Indication, say also same thing here. If you're gonna be looking for price to come back, you would have been having a stop loss just below the high lows. Obviously a 1:1. There you have your 1:1. Obviously TPE time frame 1 hour, just like I said, 1:1, waiting for price to come back to correct, obviously waiting to do the 1:1. Obviously now price is making an indication the low is way far back than it needs to be. So if you're gonna be doing that, yeah, price might just continue to push up, maybe come back to correct these levels and then only for it to continue again. But so that's some of the things that you can be looking at. But pretty much there's gonna be lots and lots of entry models that you can take advantage of. This one was the hustle entry model, and then TP just got hit even on that. And then the side one would have been this stop loss below the high lows, obviously targeting this point or targeting the next swing point, which would be probably these areas over here, these highs over here, whatever the case may be, or just a 1:1, 1:5. At this point, the 1:5 would have just got hit also on side, as entry, But you selling. I don't know what the fuck is selling, but yeah. And the ICC, the OG ICC entry method, yeah, stop losses below the high lows created above this, like I said, indication, above these levels. So now we have a new indication about these levels also above these levels over here. So whatever works best with how you know yourself, how you react to the markets, how in terms of what you're struggling with, that would definitely be one of the things. Everything that goes into your trading plan should be against all the bad habits that you have, that you know about yourself. If you know you're impatient, that means your trading execution should be based on waiting for price to come back. Like for instance, price made an indication. That should mean like if, like for instance, if okay, let's take this one over here, right? Price had made an indication. That would mean, oh, I know price made an indication, prices to come back and correct. That means what? And then there we have our week there, right? I'm gonna have a buy stop, waiting, buy limit, waiting at this area, right? And then my stop loss is gonna be below this over here. That would mean that I would just have to wait for price to unfold. And then there you have price unfolding, right? There you have price unfolding. Your triggered stop loss below the higher lows, right? These higher lows on the 1 hour, TP 1:1, right? 1:1. There you have your TP, right? And you got triggered, your entry got triggered, and as you can see, there goes price, comes back, and then TP hit. Because you know yourself. you have problem with this and this and this and that. You get what I'm saying? So everything that you do will be going against every bad habit that you have. So everything in your trading plan should be against every bad habit that you have. You get what I'm saying? So that should be the case, right? That should be the case, guys. That should be the case. As you can see, also this 1:3 just got hit. TP just hit on the 1:3. You get me? As easy as ABC, guys. ABC. I know it's not, but eventually once you get it, you'll get it. You'll start to see it. Get what I'm saying? So let's quickly do our recon on um yeah. So on Nasdaq, let's see what we have. There's a lot of gaps happening. Um yeah. Let me see what we had previously like marked up. All right, so we had this range over here. Price gave an indication, came back to correct. I spoke about price moving to the upside, and as you can see, we had previously price making this low, this lower high, and then this lower low. But then we having price pushing to the upside. Now on the 1 hour, this is how price is looking. Obviously, at these levels, as you can see, price is still above these levels over here. But obviously, knowing that, okay, this might be the last level, we had a shift in market structure, price started to move up. We had a gap today in the morning, price some sort of a consolidation. And then on the 15 minute, that's what we had. We had price breaking about these levels over here. So ideally for me, I would want to see price continue making higher highs and higher lows. So this would be something that I would mark. It will be a level that I would mark. Obviously, just wait for price to create the higher low, probably coming to correct this level over here. Obviously, like I said, we can still find trends on the 15 minutes. So this might be the 15-minute indication. So price to come back and correct this level over here. And then obviously, if price comes back to these levels, I'm gonna have probably, let's say, a buy stop waiting at that area. You get what I'm saying? So obviously, then that would mean something like this. And then wherever this high low is gonna be created, and then I probably look to take price back to the upside on a 1:3 basis. You get what I'm saying? So something like that to take price to the upside. So I don't know how far this is gonna be. This high low is gonna be created. So this, I guess you can see this in entry method, higher high, probably wherever is gonna create the higher low, and then we take price to the upside. So something like that, that's gonna be happening. So I would definitely be looking to do so that why we are above the level where we've seen price make the indication. So overall, if you wanna ride the whole thing, like 1:3 is gonna be just be around here. If you wanna run the whole thing, it's gonna be probably a 1:5. 1:5.5, 5 point whatever. You get what I'm saying? So somewhat like that, something that you can take note of, right? So going to USD, the Dow, the Jones. Let's see the Jones. The Jones, as you can see, we've had the Jones obviously also on a range. We had the Jones on a range, also higher, high, higher, low. And then price went to the upside, came back to correct, didn't break below the higher lows it made, and then went to the started to make a shift in market structure. We got in on the buys as price went to the upside almost there. Obviously, 1:3 was long hit from our entry model. The 1:3 was long hit from our entry model, and price came back again, didn't go all the way. Price came back all over again, but it didn't also break this over here, as you can see. So it broke above these levels over here on Fridays. So more or less the same thing happening. So going down to the 1 hour, as you can see on the 1 hour, as you can see on the 1 hour, we had obviously a market structure shift from these levels. Price goes giving us an indication above that. Obviously, seems like price did come back and correct. Also, the same time with these candlesticks is an indication correction over there. As you can see, also this 15-minute, we had an indication about this level. So also more or less the same thing, indication that this consolidation happening here. So I wouldn't really tap that much into it. I would really want to see a clear, a clear structure unfolding. But I still think it might just come back to the downside, to back to these levels, correct to this level. Anything above here will just be then be able to take price to the upside. So more or less the same thing. You must be on the lookout for that to happen. Probably might come just all the way down here. So wait for that, and then obviously once you can get into an opportunity, you can then be able to take price to the upside. So moving on to our German 30. Our G30 has been also, it's been just been going. Remember, we had that happening price, giving indication, come back correct. Shifting megastructure on the 15-minute price, continue to the upside. We had it ending some sort of an indication happening over here, and then price seems like it already came down to correct these highs over there. As you can see, we have some sort of a consolidation happening. Now we have a break above these highs over here. We have a break above these highs. You can see price give us an indication, so I would expect price to come back and correct back, probably back into this. Anything above here, we can then be looking to take price to the upside. So this is why these are some of the things that you can look forward to as price starts to unfold, ladies and gentlemen. Right. So with that being said, we do have Bitcoin also doing its things, starting with the 4 hour top down analysis. I had this level over here marked off during some time in December. I spoke about price giving an indication, coming back to correct, and then we can look to take price to the upside. Because why? We had this high and this low over here as part of the range that was happening, the high and the low as the range. Price then started to build from there. As you can see, the 1 hour price started to build from those levels over there, right? So obviously higher high also didn't quite come back. So I would have preferred being above this, obviously, right? I would have preferred being above that. We have this also this fake out over here, and then as you can see exactly at these levels here on the 15-minute price, as you can see, broke above that, also above these, right? Price started to make higher highs and higher lows. As you can see, higher high and higher lows at these levels being created. You could have been able to take price to the upside as it was unfolding. But we had also this consolidation happening also from here, and then price broke above that, make a higher low. Also been would have been ideal to take price to the upside. So overall, I'm thinking price might just continue to be bullish, and then for I don't know for how long, but you know, yeah, but we have this sort of a consolidation channel happening over here. So be on the lookout for that. Also on the 4 hour, we have this happening. All of these are happening on this range that we do have in between this high and this lows over here. So we have everything happening in between that. You get what I'm saying? So be careful, man. Be careful. But once on a smart time frame is you can spot structure, you can then be able to take advantage of that. You know what I'm saying? So overall, yeah, pretty much, guys. That's just how everything unfolded, and then gold, Nasdaq, whatever the case may be. You know what I'm saying? So however way you would have preferred being on it. You get what I'm saying? So yeah, whichever way you would have preferred being on it. You get what I'm saying? So yeah, guys. I think that's just about it for today. All right. So yeah. So we had this range earlier on, this high and this low over here. Price broke above that, gave us an indication above this high over here, right? And then price came back to correct price on a smaller time frame. And then as you can see, we had this new range, this high and this low. And then this was a bullish range, bullish indication. Price then broke above, give us that indication to the upside, came back to correct, made a higher low. So this low over here still kept price, and then price broke above first time, came back and broke the second time, came back, created a higher low. But then when you go to the legs of 1 hour, you can see that price indeed did make a lower high, went to the downside, made a lower low. Obviously, there was some sort of uh, lows being made, and then price made a lower high, couldn't go any further, broke above. We had a market structure shift on the 1 hour happening, which also became an indication. Price came back, created a higher low. this low over here was able to hold price. Price broke above that, giving us the indication also to the upside. Price came back to correct price, and then again price then above this level. So now we had a new break of structure earlier about this level, and I spoke about price coming back to correct back at these levels where price broke above these previous equal highs that we had here. So I spoke about price coming back, and anything above here would be you know um solid for buys. You get what I'm saying? You just needed to get into a smaller time frame. We go to 15 minutes. If you don't find anything on 15, you then drop down to 5 minutes to look for entries. So we had the indication, price came back. We had the indication, price came back. As you can see on the 15, there wasn't much to look at. But then when you drop down to the likes of 5 minutes, let's see where the 5 minute, as you can see, price has been giving a structure. As price started to break the high lows, as price was going to the downside to correct price, you can actually capitalize on the correction actually if you understand it, right? Because as you can see, with the indication, price is making these higher lows going to the upside, these higher lows, price going to the upside, and then all of a sudden price starts to break those higher lows, and then starts to go to the downside. So you can actually capitalize on that movement as price is coming to correct, but you will get to see it as time goes. Now we had price obviously this last lower high that price made it over here, and then price made the lower low. Price broke above that lower high. We had a shift market structure from here, from these levels over here. Market structure shift, price obviously higher high, higher low, and then price went to the upside. So you can clearly see it on the 1 minute. So as you can see, we had a market structure shift happening from this 5 minute lower high over here, right? We have a market structure shift happening, higher high, higher low. You mark the higher high created,
Alright,
right? You mark the higher high created.
I got you.
Hello, hello.
It's Monday, man.
Yeah, 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 yeah. It is. It is. We're taking it slow.
Go ahead,
Also,
man. Count those boxes.
the year just started, bro.
Uh, I know
Right.
some places
I can't hear you, bro.
that they've been. Nah, I usually just snuggle, but
All
I know
right.
some places are picky about it.
Yeah.
So,
All right. So we had price making higher high,
all right.
higher low. As
Yeah.
you can, price
Give
was
me a few
creating.
more of these.
Yeah. So price was creating structure, as you can see, going to the upside, high, high, low. But this didn't break above these 5 minute lower highs. We had a break above 5 minute lower highs. As you can see, price ended up breaking above those lower highs over there, right? We saw price break above those low, there you have it. Stop loss gonna just be below this, over here, and then your 1:3 would just be around, let me see, 37 times 3, that's just about let me see, yeah, 100 and, is it 101? I think so. 101 or 110, somewhere there, right? So this would have been your entry. Stop loss just below the high lows, and then let me see, honest, yeah, just about, yeah, honest to 3, yeah, somewhere here, yeah. All right, so as you can see, price then started to push to the upside up until now, right? So this low also was able to hold price, and now as you can see, price is still trying to push to that upside. You get what I'm saying? So taking now pressure CTP, by the way, as you can see, pressure CTP currently on a 1:3. So it's just a matter of correlating what's happening on a higher time frame. So in this case, your higher time frame would have been the 1 hour, but not forgetting that the 4 hour is still bullish, right? So price just came to correct the 4 hour levels over here. So obviously now dropping to the 1 hour, you can see price has also been making higher highs and higher lows, higher high, higher low, and then price made a higher high also. Price came back to correct these levels. That's how we were able to get that 1:3 on a smaller time frame. So as you can see, going down to a likes of 5 minutes, that's how the trade actually looks like. So pretty much, just under, yeah, just under 30 minutes, the trade would have hit. You get what I'm saying? So as you can see, price will continue to move to the upside. The next level where we want to see price break is this level over here. You get what I'm saying? So we want to see price break above these levels over here, these highs over here that we have over here. So we want to see price break above that. As you can see, price is pushing above those levels. And I did speak about that, and I had people talking about, oh, Sai is selling. Why are you buying? It has nothing to do with me. If he's selling, that's cool. That's on him. He's selling based on what he sees. I'm buying based on what I see. And as you can see, as far as my my analysis, I was able to trust my analysis, and price is pushing to the upside. So I think one of the latest videos on YouTube, there's a breakdown in terms of how I saw price as it was coming to the upside, because I was looking forward to price breaking above as it did today after the market opened, and then price started to push to the upside. As you can see, price is pushing to the upside. So we had this indication also today, and then price came back to correct after London Open, and then from there price was able to start pushing to the upside. So now we want to see price actually give us an indication also above these highs over here, which would we want to see price do something like this, come back to correct, and anything above here also will still be grounds for bias, right? But also not forgetting the 4 hour, like I always say, not forgetting the 4 hour, that on the 4 hour, we still taking price back to these all-time highs that we do have, you know, um, back to these all-time highs that we do have over here. You get what I'm saying? We're still taking price back to these all-time highs that we do have here. So we capitalize on the 1 hour, dropping down to like 15 minutes and 5 minutes. If we get an entry, even the 1 minute, if you want to get an entry, obviously just being above where price has shown you an indication, obviously things like the market structure shift can then show you when the correction is complete. Same thing when we're able to take the correction back to the downside. We didn't take it all the way through. There's no need for you to take price all the way to the upside, but if you want to do it, there's a couple of ways you can then use. You can able to take price as it continues to move to the upside. So those are just some of the things that you can look into, jump into, as price unfolds. You get what I'm saying? So you don't have to overdo it. You just make your trading as simple as possible. You get what I'm saying? So that's what I always like to do that, and that's what I always like to encourage others to do. Simplify your trading. Make it simple as possible. You get what I'm saying? Before you even mark on your 1 hour, start from the 4 hours. See what's happening. You get me? So we on the 4 hour, we had these highs over here being created, right? After price broke the all-time highs that we did have before, right? And then also from these, when price was breaking those all-time highs, we did have price giving us an indication from those levels as price came down to correct, and then it didn't break the higher low that was made by the range, and then obviously from there price started to push back up to the upside. So those are some of the things that I was looking into as price was pushing back up to the upside. So there's no need for you to actually bring in the whole move. But like I did say, I think earlier on our London session, I was saying, there's ways in terms of in terms of building your trading plan, which is very, 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 very vital for your trading. There's ways. You need your setup, you need your entry criteria, and then you need your risk to reward ratio. So depending on your risk to reward and your entry criteria, and also your what is this, and your A plus setup, that will determine your trading plan. If you are impatient, if you tend to get in way too early, hoping that like, oh, other this move might miss me, or this kind of thing, though the trading plan is there to help you not to get into those stand up making those mistakes. You get what I'm saying? So I just want to show you guys something also over here, right? Same thing also at the very same levels, right? This is another pair, but it's still gold. I just saw for example purposes. As you can see, price gave an indication on the 1 hour about this level. As price was coming back to correct these levels over here, right? If you were trading a 1:1, right? If you were trading a 1:1, you could have had a buy stop waiting at this area already, right? You could have had a buy stop, a buy limit actually waiting at this area. Stop loss just below the high lows created as price was moving to the upside. Stop loss just below the high lows, higher high, higher low. As you can see, that high is above these lower highs that were made, and this low is above these lows that were made. So this is a higher low. You get what I'm saying? This is a higher low, this is a higher high. So obviously you just have a buy stop waiting. As price unfolds, as you can see, price starts to unfold. You can then obviously understand that okay, I'm risking probably 1,003, and then I'm looking to make also another 1,003. You get what I'm saying? So 1:1 TP hit, as you can see, and then price start to move to the upside. It gives you another indication to the upside also, right? It gives you another indication to the upside. Also the same thing. There's the low, right? Here's your low over here, right? So what you want to do is what? Obviously, as price gives you an indication, you also want to have another, reach 1:1 up at these levels, and then obviously your 1:1 would be at this level over here. So now you would already be in profit. You don't have to worry about price taking out the stop loss. If price hits your stop loss and takes you out, that indicates a market structure shift on a higher time frame. That would mean that we have a new indication if you're going for a 1:1. And people will always say, oh, but 1:1 is not enough. Trust me, 1:1 is actually enough because how? If you're risking $100 or $1,000 from for a one is on a 1:1, you risk 100% of your account, which is like $1,000 or $100. You get what I'm saying? That's for life account, personal account purposes. This is not for pro firms. But you can also do it on pro firms, but you don't have to overdo it on pro firms because now there's also daily thresholds in terms of how much you can lose, all those kind of things involved. So on a personal account, 1:1 actually, when you're building your trading plan on a 1:1, right, if you're building your trading plan on a 1:1, just gonna show you 1:1 RR, right? So this will be something like this. Like I said, if price is going to the upside, you get what I'm saying? Something like this. If price is going to the upside, right? So price breaks from these previous highs. You have price giving us you an indication as price is coming back to correct, right? You already have a buy limit waiting for price. Stop loss just below the high lows, and then obviously you're looking to make a 1:1. You get what I'm saying? So it will look somewhat like this. You get what I'm saying? Similar thing if price was going to the downside, price makes a low, lower low, goes back and correct and then continues to the downside. You don't have to worry about anything, right? Then obviously you know that I've had an indication I'm gonna have a sell limit waiting at this area. Stop loss just be below above the higher lows, and then obviously my 1:1 would be at this area, right? So this is the A plus setup that you're going for. Your entry criteria is basically you're gonna have a buy limit or a sell limit waiting depending where the trend of the whole pair is going. You get what I'm saying? And especially the time frame. But I would highly recommend using this, especially on the 1 hour or the 15 minutes. You get what I'm saying? So these are some of the things you can use on the 1:1. You can use it there, right? So I wanna give you more of a breakdown in terms of how a 1:1 can actually benefit you. You get what I'm saying? So if you 5 trades away, actually, right? You 5 trades away. I'm just gonna show you trade number one, trade number two, trade number three, trade number four, trade number five. You 5 trades away from a 1:32. Meaning if you're risking $100, right? If you're risking $100, you're looking to make $100, another $100, right? On a 1:1, right? So overall, your profit. You're now gonna your account balance will be at $200. The second trade, you risk the $200. You get what I'm saying? And then you're able to make, oh man, not 100 million. But what am I doing? All right. So second trade, you're risking $200. to make another $200. It's 1:1. Whatever you risk, that's what you get in return. Your account balance now moves to $400. You get what I'm saying? Trade number three, more or less the same thing. $400 risk on a 1:1, and then obviously you make another $400, which now leaves you with $800. Trade number four, you risk also $800, and then you're looking to make another $800, which leaves you with $600. You get what I'm saying? I mean $1,600, which is like $1,600, right? So whichever works for you, wherever where like you feel like, oh, I'm just gonna continue doing this up until 5 trades, or maybe you can say up to trade number three. If you find with up to trade number three and then you start the whole process all over again, it's still fine. Whatever works best for you, that will be what you can go with. You get what I'm saying? So this is more or less the same thing, right? Now you're building a process, right? Now you're building a process which would then be, you see, 1:1 after 5 trades is 1:32. So now you going for 1:32 with minimum, you get what I'm saying? With minimum, hustle, without having to worry way too much whenever it comes to your trading. You don't have to worry about stuff. If you make a loss, it's still fine. But your initial risk was $100. You get what I'm saying? Same thing applies if you were risking $1,000, right? I'm just gonna give you guys an example. Initial risk $1,000. This can be now your target in terms of how much you're targeting, all those kind of things. You get what I'm saying? You can start from the $100, and once maybe you add the $1,600, you can then move on to this $1,000, or you can repeat this one over here, and then until you're comfortable enough to start risking $1,000. Now you have a process that actually works. You get what I'm saying? You have a process that actually works. So now, from a risk of $1,000, I mean, from a risk of $100, you end up making, after 5 trades, you end up making $3,200, which is $3,000. And then from a risk of $1,000, from a risk of $1,000, you end up making $32,000. And this is possible. This is possible. I'm not trying to sell you a dream to catch a 1:10, 1:7, or 1:15. Those are just some of the things, like you need to be realistic. If you're looking to catch a 1:32 in the market, imagine you say you want to catch a 1:32 in the market. Even from here up until this high over here, it's just 1:2, almost 1:1.6. You get what I'm saying? Even if your stop loss is gonna be like, it's not. What are the chances that market comes and takes you out? You get what I'm saying? You need to be realistic in terms of what you're aiming for, your risk to reward, your plan, all those kind of things. You get what I'm saying? You need to be very realistic in terms of your trading. You need to be realistic in terms of your trading. And then, like I said, 1:1, simple. You keep it simple as possible. Indication. Once the indication is there, you're just gonna have a buy stop waiting for price to come and trigger it. Even if price corrects up until, as long as your stop rate just below this high lows over here, even price comes and makes equal lows, it won't take you out. Price would, as much as you understand. As long as price is bullish, it will continue. If not, that would mean that's a shift in market structure. Then that would mean that now price is moving from an uptrend to a downtrend. So now you must start looking for sales to the downside, as price would give you an indication, come back and correct, and then go to the downside. That's what you're gonna be looking for. You get what I'm saying? So for a fact that if price is not making, this if it's not continue with the bullish momentum, is gonna be making a market structure shift to then start giving sales to the downside. So pretty much, just like I said, these two, they actually help balance each other out. You get what I'm saying? So you start here with $100, build your own process, and then you move to $1,000 on a 1:1. Only 5 trades. You get what I'm saying? Only 5 trades. You can take a single trade a week, a day actually, and then obviously 5 days a week you can be looking to make $200 from $100. And if you're risking $1,000, you can be looking to make $2,000 per week. If you're risking $1,000, as an initial risk from Monday, and then you're looking to flip that. Already your 1:1 for the day at this exact moment over here, as price came back to correct, and then stop loss just below the high lows over here, created in the 1 hour, and then there goes your 1:1. You would have already hit your first TP for the day. Now, obviously, probably you would be on the second one. Obviously, your stop loss would be below this higher low over here, which would be something like this. Stop loss below the higher lows over here, as this low is the one that made this indication, is the one that gave you this new higher high that price made to the upside. So now the 1:1 there would be at these levels over here. You get what I'm saying? So as you can see, you would be already be in profit. So you, from these things, that's how you can able, whether price is gonna go into, whatever, come and create the higher low and then push it. You don't have to stress. It's just, it helps you mentally in terms of having to deal and waiting for setups to unfold, and waiting for price to get to a TP or hit your stop loss. This is a 1:1. That's how simple it can get. But if you wanna have a 1:3, then a 1:3, that's where things gets to get a little bit more interesting, because now that's where you have to have okay, price has given me an indication, price came back to correct, anything above I can buy. But how can you buy anything above? You then obviously have to have the correlation with the market, meaning the multi-time frame correlation, the MSC concept that we do have, right? Obviously, like I said, price is making higher highs and higher lows, right? So you want to have price break above the level where price is giving you an indication before making a higher high and a higher low. So now you can be able to take price from the higher high created. Once price gives you a higher high and then comes create a higher low, you then have a buy stop waiting, stop loss just below the higher lows, and then you can look to take price on a 1:3. This here you can take at least up to 3 setups a day of 1:3s. Why? The reason why 3 setups a day? The reason is, um, this would help you in a way, because of these trades, they actually balance each other out. If you lose 2 out of 3 trades and you win one, you still up 1% of the for the day. You get what I'm saying? If you're risking 1% of your account, you're still gonna be up 1%. If you're risking $100, which means you lost 3 trades, you lost $200, and then you won the maybe the first one or the third one or the second one, whatever the case may be, you're still gonna be up $100, because it was able to balance that loss of $200 that you made, that you took earlier, right? And then if you're risking $1,000, you're still gonna be up $1,000 for the day after if you lost 2 trades for the day. You get what I'm saying? So that's how they can be able to balance themselves out. You get what I'm saying? On a 1:3. That's the maximum. There's no need for you to be holding and saying, oh, I want to get the 1:10. There's no need for that. And anything can happen in the market. Now you get what I'm saying? Anything can happen in the market. So you wanna be in a place where you have a solid process in place, where okay, if price doesn't do this, it's actually gonna do that. So like I said, 1:1 and 1:3, those are some of the things that you can actually take. If not, you can then go with the one that side teaches. Price gave you an indication about this level, right? Price gave you, as you can see, price gave you an indication about these levels, right? So this indication, price can be correct, made a higher low. So that means anything above where the indication happened, you buy. Stop loss is gonna be below the higher lows over here, the higher lows, and then you can look to take price up until these highs over here, which would have been obviously a 1:1, as you can see also, or you can look to aim for the next swing point. In this case, I don't know what the next swing point will be, but if you're gonna aim for those highs, which is yeah, you can aim for them, the all-time highs that were made before price came back to quarter. You can aim for them, but as you can see, it would have been a 1:4, so you would have been waiting all along for this trade. It's still fine. There's nothing wrong with any of that. You can still do that. You get what I'm saying? You can still do that, But my what my take is that there's not really much to learn, and there's not really a process in place for you to follow, because now anything that can happen, should price come back from these levels and come and correct here at the very same levels here, you will be panicking because you don't have a solid process in place. Because now you were looking for price to continue, like Sai says, or like the hustle says. If price does come here and not understanding that price is coming back to correct, and then price to continue to the upside, you would be panicking if price is coming back to the downside. Like, oh, I was up, 100 and something dollars now, or 1,000 something dollars. Now I'm down. I'm in a red, but only for price for it to continue to the upside. At the very same time, price can also, as is came to correct, price can also go up, come back to the downside, create a lower high, and then go to the downside and take you out. So those are some of the things you should be wary of. So whatever works best with your bad habits, your trading plan should be the opposite of your bad habits, which is something that will then be able to keep you in check, and also not to make you worry, because I won't tell you that I don't worry about my trade. I can be in a trade and I'll be like, I should have done this, I should have done that. Everybody goes through the same thing. There's no one that doesn't take losses. Everybody take their losses. So either way, whatever works best with you is what you can then be able to practice.